Okay, I would like to start off with some of the positives in the report. Can you please make a comment on the EBITDA development?
I am of course extremely happy that we delivered what we had guided on, namely 1 billion in EBITDA for 2012, achieved by good performance across the company.
And how do you see EBITDA developing into 2013?
We have guided before that we will have an EBITDA on the same level as 2012, and I see no reason to change that. We have good plans, good cost-cutting exercises in place, so we're comfortable that we will deliver on that guidance.
And how do you manage to continue to save your cost?
Well, we are very impressed that we achieved 265 million in 2012, and we will actually be saving more for next year. That will be through running a more efficient operation across all market units.
And you increased net profit this year. Can you make a comment on that, please?
Yes, of course. Last year we had in 2011 we had a loss of close to 200 million. Now we have a profit of over 200 millions. Being able to manage from EBITDA over depreciation, interest cost, and whatever. And the most important thing for a company is to be profitable. So I'm very happy about that.
Why do you see that companies need Eniro services when they're already advertising at Google?
For local search, people need the Eniro properties because that's the only media where you yourself decide on the presentation and the ranking of your company, and we can provide much more conversion to our advertisers compared with Google.
And the revenue development in the report is a bit soft. Why is that?
The idea now is to have our digital growth compensating for the structural decline in voice and print. And we were a bit slow on that development during the fourth quarter, especially with large corporates and media agencies.
And what actions are Eniro taking to come back into growth?
Throughout 2012, we have been focusing on the brand of the company and the users of our services, and thereby we are increasing traffic, and that is the most important thing for us, that traffic is growing going forward.
And when do you see Eniro turning back into growth?
We have guided that we will see the digital part of our business growing for 2013 and a continued decline in voice and print, but midterm we will see a growth in Eniro as a total.
How is the development of your respective revenue areas?
Fundamentally, we have a growing ad market supporting our business, and we can clearly see now that internet, search words and mobile is growing very fast. We try to have our product portfolio in line with that. If we start with online directory, it is growing, both in desktop online and in mobile. And the most important thing, of course, is mobile, where we already see 25% of searches being done via the mobile, and also of news says 25% coming from that. So mobile first is what we are heading at. Secondly, in media products, we have built a portfolio of online presence products and sponsored link products that takes the advantage of that growing segment, and that developed with a plus 25% in Q4. For print and voice, we see a good long tail, i.e. that we are trying to milk those two categories, making good profits of it, and the print business is profitable and the voice business is also profitable. So overall, we have a very good portfolio coming into 2013.
Are there any major changes to Eniro's cash conversion model going into 2013?
Not at all. On the contrary, I find it very stable. We have our EBITDA, we know our investment, we know our interest payments, we know our working capital development, so the cash conversion will remain very high in 2013.
And Eniro has a capital structure target of a net debt to EBITDA of 2.5. How is that progressing?
At the end of 2012, we reached 2.8 in net debt to EBITDA. So the goal of 2.5 is quite reachable in 2013.
So that means that you soon will come up into dividend again?
Well, what we have said is that we're going to repay debt also in 2013 to create the possibility to share sort of repayment between bank loans and the equity market.
And you are to renegotiate your loan facilities at the end of 2014, and how is that progressing?
We are making preparations already now because we want to be well in advance before the maturity of that facility.
focus for Eniro 2013? On the product side, what can users expect from Eniro?
First, I must say that I'm very proud about what the product team achieved last year with new maps, better traffic, and quite a few awards that came our way. For 2013, we will see full integration of social media, we will see integration of ratings, we will see a first step into commerce and a new interface. So I think that users will expect a lot of good new things from Eniro.
And what is the most important thing for Eniro to handle during the year?
It's always to be better than Google, because if we are relevant on hyperlocal search, there is no reason for users to be on Google.
And if we go into the financial part, you give a financial outlook both on revenue and EBITDA. If you were to prioritize between those two, how would you comment on that?
It's always the most important thing to create profitability and stable profitability into a company and good cash conversion. So that target always have priority. But then of course we need to grow the company to have a sustainable business going forward.